At Synapis, we say that Synapis is not just a program. We just don't run programs. We are here to build communities. We are here to see that the people who come through our programs are actually equipped to take their businesses to the next level. And after that, we don't leave you hanging on the air. We want you to join our alumni communities that can help you walk this walk. We know entrepreneurship is a lonely journey. And if you have someone who is checking up on you, somebody who is keeping you accountable, someone who is very committed to your success, that is something that you should grab with both hands. I know there are many, many programs that you are probably going through, and once you've done the program, that's it. But that's not how we are at Synapis. At Synapis, we are a family. And one of the things that we love to keep the family going is to support one another. And bringing this tax session is actually one way of us supporting our entrepreneurs. At the beginning of the year, there were so many taxes that were introduced, and there was a lot of conversation, like what is digital tax? What does that mean for my business? Or minimal tax? Though that will not be covered today because it is still with the courts. But when we realize that there is so much going on with regards to taxation, and people were actually yearning and looking for knowledge in matters related to these new taxes, we thought this is the best way to go about it. So we partnered with KRA to actually bring you this session today. So I am really, really honored to have Wanja Wangondu on the call today to take us through this session. I'm sure she will be joined by her two colleagues. But as at this point, I would like to invite Wanja to actually just tell us who is KRA, because many times when people hear KRA, people like, what? I'm in trouble. So Wanja, please feel free to tell us more about KRA so that at least all our fears can be put to rest today. Karibu sana.
Thank you. Thank you, Beatrice, and thank you, the whole Synapis alumni. It's an honor to be here this evening, and more so to discuss on taxes. So we will be looking into the various taxes that we have. And you have been asking, who is KRA? KRA is your brother and your sister. And so in today's session, we'll be able to see what are those taxes that apply to us, what are the kind of the businesses that we are doing, and how and when is the given tax payable. One thing I've learned is once somebody gets the knowledge about a given item, it gets easier to handle that item, despite the hardest thing that even would be there. Once we get the information, it gets easier for us. So my name is Wanja Wangondu from Taxpayer Services. And in Taxpayer Services, our motto is give as much information as possible to help the person who want to take care of their tax concerns. I will be joined by my colleagues, but Beatrice confirmed, I tend to think that people who have not joined because the links have issues. Two of my colleagues, the links is saying that the host is in another meeting, so they're not able to join because of that. Yes, yes. Maybe also there would be a few maybe there would be some of the business persons who have got a similar challenge. Yeah. Beatrice, you're muted.
Oops, sorry. I'm saying, I wonder what the challenge is, because
Yes.
Nixon has just joined.
Oh, Nixon has joined. That's good. Okay.
Yes.
Ah,
Yes.
that Nixon has joined after we have had. Okay, Nixon, you good? Nixon.
Yes, Wanja, I'm okay.
You may say hi to the people as we proceed.
Hi, team. Hi, participants. Thank you.
Okay, so Nixon is my colleague and we'll be able to take you through the training in relation to taxes together. So I will start and he will proceed. Okay, so what we will look into today, we look into introduction and the type of taxes. Then we look at the taxation of business income. I'm happy most of us are doing businesses and our own businesses, so this is very important for us. We will also look at the value-added tax concepts and principles, the voluntary tax disclosure program, and just one slide about integrity and access to information. So when you are doing business in Kenya, we register our businesses either as a sole proprietor, a partnership, or a limited company. When we register our businesses as a sole proprietor, then we use our own PIN in doing that business, and we file the returns using our individual PIN number. And then we suffer tax, or we pay tax at the graduated scale rate for individuals. Then when we do business as a partnership, that's when maybe we have registered as registered the business name. Then when we do our business, at the end of the year, the profits get shared among the partners, and it's the partners who pay tax on the partnership profit. And for obligations like pay as you earn, that is for employees, where the employer puts the pay as you earn obligation because the employer has employees, the pay as you the partnership PIN will have such an obligation. And then for the company is where we have this artificial person. And for the artificial person, these are non-individuals who are doing business. So for the non-individuals who are doing business, the tax is at the corporate tax rate, which is at 30% for the resident companies, and 37.5% for the non-resident companies. So now a tax cycle, we normally register as taxpayers. This is where we get the PIN number. This is where we get the relevant tax obligations. And after we do that, we make a self-assessment and we file the given tax returns. After filing the returns, then we pay any taxes as it falls due. And finally, we handle any matters that would be arising. Maybe we have refunds, we have waivers, and the like. But basically, this is the tax cycle that we go through. Now, the various type of taxes that we have, they include direct taxes. Now, a direct tax is that tax that the person who is supposed to remit it is the person who actually pays it. For example, the corporation tax for companies, the income tax for individuals, the turnover tax, and the capital gains tax. You who is supposed to file the returns and pay the tax, you are the one who actually get the money from your pocket. Then we have indirect taxes. For indirect taxes, this is where the person who is actually paying the tax is not the one who, the person who is required to file is not the one who actually pays. Like for example, for value-added tax, a registered trader will charge you and me when we go to buy goods from them or services. But it's that registered trader who adds the value-added tax obligation. The same case applies to excise tax. Then we have agency taxes. Agency taxes are like the withholding taxes and also those ones that we collect on behalf of other entities. Like we collect the standards levy for the KEBS. So when we are accounting, or how do we account for our business income? Now, you notice the law in Kenya says that income that's taxable in Kenya is that income where the business is carried wholly in Kenya or partly in and partly outside Kenya. That is the kind of the business that get taxed in Kenya. And so for businesses, we have two types of regime. We have the annual tax regime, the person who have the income tax, and the people who have the turnover tax. So it depends with the tax that you, the obligation that you will select, but you'll be able to see who is that who has the turnover tax and who is that who has the annual regime. Just a minute. Okay. Just a minute. You know, it's telling me that I've paused the screen sharing. Can you see my screen, Beatrice? Beatrice, can you see my screen? Nixon, can you see my screen?
Okay, the screen is visible on turnover tax slide.
Oh, fine. Thank you. That's okay. Thank you. We've gone back. It's telling me that your screen sharing is paused. Just a minute, I want to see this stop share. Let me just share Flash. I think it's having. Okay. 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 So now the types of income that are chargeable to tax include the business income from any trade or profession, the income from employment or services that are rendered, the rental income, and we'll see how that is chargeable to tax, the pensions income, the investment income, and capital gains, as we have discussed about the capital gains a few minutes ago. So for the people who have business income, the mode of accounting, or we are required to file our returns. If you have income tax obligation, you file your returns once in a year. That is, but taxes, we pay the taxes through installments. We pay the taxes through installments. And so for installment taxes, the first installment is due on or before the 20th of the 4th month. The second installment on or before the 20th of the 6th month. The third installment on or before the 20th of the 9th month. And the fourth and last installment on or before the 20th of the 12th month. And then come the end of the year, we prepare the accounts and we see the taxes that we paid. In case the taxes that we paid were less through installments, then we pay the balance of tax. But the filing of returns, when we have income tax obligation, for income tax purposes is once in a year. And at this point, I'm urging all of us to ensure that we file our income tax returns. As individuals and partnerships, our year ends on the 31st December. And so the first return we are expected, our return for 2020, we expected to remit it on or before the 20th, on or before the 30th of June. So this month, today's 4th, we have 25 days to go. So let's ensure we file our returns. So for persons in business, if you have the income tax obligation, the law states that if it is a non-individual or an individual whose tax payable in a given year is more than 40,000, we are required to pay our taxes in installments. What this means is we ought to project, because installment tax we pay through the course of the year. So we look at what are the taxes we paid last year. We grow that tax by 10%. And once we grow it by 10%, then we divide it into 4. Like in this case, if the person's last year's tax liability is 100,000, we have grown it with 10%, that's a projection, and it's the generally accepted projection. Then once we get 110, we divide by 4 to get 27,500. This will be paid at on or before every installment date. Then come the end of the year, once the trader realizes that their tax payable is 150,000 and the same trader only paid 110,000 through the installments, the balance of the 40,000 becomes payable on or before the 30th of the 4th month following the end of that year. So now, in addition, I had seen somebody who had asked a question to do with minimum tax. And I said, let me just have one slide and explain it in literal or in a short way so that we understand. Now, with effect from January this year, a tax known as minimum tax was introduced. And minimum tax, remember we have just talked about the installment taxes. Minimum tax was introduced as a sister of installment tax, whereby in a given quarter, you look at what is higher between the installment tax and minimum tax. Then you pay the higher of the two. Minimum tax is payable at 1% of the gross turnover. But you notice, with effect from April 2021, there is a court order that has stopped it until the case is decided fully. So as it is today, you are not paying minimum tax, but you are paying installment tax. Note that. Now, the other tax obligation that persons in business have is the pay-as-you-earn obligation. Pay-as-you-earn obligation is for that person who has employed people. And when you have employed, meaning you are an employer, and when you have employed these employees, you pay them either wages, either salaries, leave pay, commissions, allowances, and all the benefits that the employees may be getting from your premise. So what this says, if what you pay your employees is more than 24,000, even if it's one of them, you are required to get the pay-as-you-earn obligation. And once you get the pay-as-you-earn obligation, you as the employer, you ensure that every month on or before the 9th of the following month, you file the pay-as-you-earn returns, and you'll meet the pay-as-you-earn taxes that you have deducted on your employees. And then come the end of the year, you issue your employees with a tax deduction card. And it's that tax deduction card that your employees will use in filing their income tax returns. Now, basically, all the benefits that we get from employment will be taxable, except for a few that the Act specifically talks about. And the few includes any benefit in kind that you get whose value is less than 3,000. It's not taxable. But if you get any benefit in kind whose value is 3,000 or is more than 3,000, it becomes taxable. When you get benefits like car benefit, those are also taxable. When the employer houses you, that's taxable. When the employer gives you loans at lower interest rate than the prevailing market rate, that is taxable on you as well. Now, these are the new pay-as-you-earn tax bands that are in use from January this year to now. I think the whole of this year, these are the tax bands that we will use. If the Finance Act changes, then we'll move to what the Finance Act will state. But for the year 2021, these are the tax bands. That is, the first 24,000 in a month is taxed at 10%. The next 8,333 is taxed at 25%. And what is above that 2,333 is taxed at 30%. And the personal relief is 28,800 in a year or 2,400 in a month. Now, the other tax that we need to know about is withholding tax. Now, for withholding taxes, there are some items that the Act talks about from Section 10. And the Act says, if you are making a payment in relation to management, professional, contractual fees, a number of items it lists, which are about 11 or 12, then it says, you who is making a payment, you ought to deduct withholding tax. And once you deduct the withholding tax, you limit that withholding tax to the commissioner and pay the person less the withholding tax. An example, when you pay management fees, the withholding tax to residents is 5%. So if you pay management fees to a resident, you need to pay them 95%, 5% you deduct in form of taxes, and you limit to the commissioner. And then everything that you will have withheld in the current month, you ensure you limit it on or before the 20th of the following month. So if you go on our website, we have put a material on withholding taxes, and that material has even the tax rates. So it will be easier for you. It has the given items that attract withholding tax and their tax rates for the residents and non-residents. So I would like all of us to check so that when we are making any payment, we are able to deduct the withholding taxes that we ought to deduct. Now, we were talking about the turnover tax, and we said for people in business, you either have income tax obligation or turnover tax. Now, for turnover tax, it is for those persons whose turnover falls between 1 million in a year to 50 million. And the tax is at 1% of the gross sales. That means you're not allowed to less any expenses. You just take 1% of your sales, and that is the turnover tax. And once you pay that 1% from the turnover, at the income taxes, that is, you will not pay any other tax in relation to income tax from the profit of that business. Like that, what I mean, you can't pay like digital, you're not required to pay digital service tax, you're not required to pay minimum tax, you're not required to pay installment tax because that business is under turnover tax. And then for the traders who are in turnover tax, the taxes are due and payable on or before the 20th of the following month. That means you file your returns every month, and what you sell, like in the month of June, you pay tax on it on or before the 20th of July. You pay tax on it on or before the 20th of July. Then we have the tax on residential rental income. If you have the rental properties and you choose to be in the monthly regime where you pay 10% every month of the rent that you have received, then you will be required to file your returns every month. And the people who qualify to be in the monthly regime are the people whose gross rent is between 288,000 in a year to 15 million. That is 24,000 in a month. Yeah. And then for the monthly rental income tax, the returns are filed on or before the 20th day of the following month. So the rental income that you get in the month of June, you file the return and you pay that tax on or before the 20th of July. Then we have value-added tax. And value-added tax is for any trader who first is having either income tax obligation or turnover tax. What we look at the value-added tax is, are you expecting to supply or are you supplying taxable goods and services whose value is 5 million and above within 12 months? Then you are required to register with value-added tax obligation within 30 days on which you became a taxable person. After you register, you are required to buy an electronic tax register. And then after that, you are required to ensure you file your returns every month and make the payment on the taxes that's due on or before the 20th of the following month. And you note, VAT is only charged by the persons who are registered for the VAT obligation. And that's why I was telling us that the trader will have the VAT obligation, but you and I, when we go to buy the goods from supermarket, as we may not be registered with VAT. So the supermarket just sells to us. We are charged VAT when you buy the goods that are fatable. And then it is the trader who is now registered with VAT who will remit the tax to the tax authority. Now, we have 3 rates of tax for value-added tax. We have the 0% for the zero-rated supply, and these are the goods that are in the second schedule of the value-added tax. Now, I advocate or I advise all my taxpayers that if you are registered with VAT, download the VAT Act and be able to see what are those things that are zero-rated, fatable at 8%, at 16%, or exempt. If the things that you deal with are exempt, then you're not required to be registered with VAT. So once you check through the VAT Act, you're able to see that I deal with planting maize and I sell the dry maize. That's exempt. So I should not be with the VAT obligation. So the zero-rated supplies include like the exportation of goods and services. Then we have the petroleum oils that are at 8%. And then anything else, you see the first schedule has the exempt goods and services. The second schedule have the zero-rated. That's the ones that are fatable, yes, but at 0%. And then 8% is for the petroleum oils. Anything else that you may be dealing with now is what we are saying. It's at the general rate of 16%. So last year, the VAT rate was at 14%. So I wish to state that with effect from January of this year, the VAT moved back from 14 to 16%. And so anybody who is supposed to claim an input tax that was for last year will claim it at 14%. And then in case even today you have a debit or a credit note that relates to April to December last year, the system will automatically pick for that 14%. But from January this year, it's 16%. Now, there is a penalty for late filing of the returns. And maybe the first penalties I may talk about is the penalty for not keeping proper records. And if you fail to keep proper records, there's a penalty of 10% of the tax which is due, or Kenya shillings 10,000, whichever is higher. And for the late filing of returns for pay-as-you-earn, it is 25% or 10,000. I noted I changed in the ones I sent you, Beatrice, but in this one, I think I've opened the one that I didn't say due. But for employment income, it's 25% of the tax due, or 10,000, not 20. And then for the turnover tax, the penalties, and the returns are filed monthly for turnover tax, the penalty is 1,000. For the VAT and excise tax, the late filing penalty is 5% of the tax due, or Kenya shillings 10,000, whichever is higher. And then for any other taxes that relate to non-individuals, the penalties is 5% of the tax due, or 20,000. I don't know how they interchanged. For employment income is where there is 10. For other non-individual cases is 20,000. And then the individual cases is 5% of tax due, or 2,000. And then if any tax remains unpaid after the due date, it has a penalty of 5%. And then there's also an interest of 1% of that tax that's due. So let's ensure we file our returns on time and we adhere to what is required of us. So at this point, I would like to invite my colleague, Mr. Nixon. Are you, Mr. Nixon? Mr. Nixon?
Yes, yes, Wanja.
Are you able to take it up now?
Yes, it is. It's much okay.
Welcome. Welcome and
Yes.
proceed, and then we had other questions. Welcome, Mr. Nixon.
Thank you so much, Wanja. I think what you've presented is very straightforward, but I think our participants should also be aware that we are giving a very high level kind of presentation. I hope we clarify some of the areas even as we go through the Q&A session. So very quickly on the two remaining presentations, is that there is the voluntary tax disclosure program, what we call the VTDP. Some people simply call it VDP. Is that many countries guided by international best practice have seen it better to introduce mechanisms to make it easier for taxpayers to pay tax. Again, also to assist tax authorities to clean up their systems. Because as you'll realize that KRA might be carrying a lot of debt in terms of interest and penalties, which are not collectible in the near future or collectible, easily. Because one canon of taxation is that a good tax system should be economical, should use less resources, but collect a lot of tax. And so many jurisdictions came up with what we call voluntary disclosure programs or voluntary disclosure mechanism. And just a year or so ago, in 2016-17 thereabout, we also had a voluntary disclosure of income declared abroad, income that gave rise to some assets that have been accumulated outside the country. So such mechanisms are there to assist organizations collect more tax and also clean up their systems. Of course, it's also making it affordable for many taxpayers to pay the requisite tax. So the government saw it better to come up with this program so that if there's any income you have not declared between 2016 and 2020, I hope that is the 5-year period, then you are eligible under this program declare the principal tax, and then you get relief of all the penalties and interest. And this is not limited to any tax head. All the tax heads that are administered by the Commissioner Domestic Taxes Department are eligible for this kind of program. So if you know you've not declared tax for a particular year, between 5 years from June 30th, 2020, going backwards, then this program is ideally for you. And it's a classical case where I have always said, the earlier, the bad, the fattest, the worm. So that if you declare between January 2021 and December 2021, you're eligible for 100% relief. If you declare in 2022, maybe you are waiting for the elections before you declare, it might not be very easy for you. You will only be eligible for 50%. And if you'll be waiting for maybe the new president 2023, you'll only be eligible for 25%. So it is important that our taxpayers, including myself, we declare any taxes that we have not declared before within that period that the amnesty or the disclosure program has been availed, to declare and pay the requisite taxes. Remember, it is available in the iTax system based on good faith. It is you to declare what you have not declared before and pay those taxes as appropriate. But remember, if the commissioner later gets information that you did not declare the full amount, then the reprieve actually might be withdrawn. So it is important that all our taxpayers do it in good faith. However, there are people who are not eligible for that program. Who are these? These are people who are under investigations. There are people whose books are already being audited, or KRA has already instituted maybe compliance program against the taxpayers. Okay, and that negates the fact that you are voluntarily declaring. You are actually the income is being sought from you without you coming forward to declare, and that is when you will not be eligible for the program. That is the short of that presentation, and I've already said almost all the tax heads are covered, and you can take advantage of this program. And then I've already said 10, 100, 50, and 25. The more you delay, the less relief you get with respect to tax. And remember, even as this voluntary disclosure program is being rolled out or is being implemented, taxpayers are still eligible for the program under the Tax Procedure Act, which is waiver of penalties and interest. Remember, this is available for those who have income to declare. So if you just have penalties and interest which have accumulated on your ledger, please, the framework for relief for penalties and interest under waiver process is still available. The last presentation is on digital service tax. The economy is actually going digital, and the traditional means with which people carried business is no longer tenable, especially after the pandemic set in. It actually accelerated the issue of digitalization. The tax laws that are being implemented currently are based on very old tax rules and laws. And when the tax laws were generally instituted, the issue of digitalization was just but a mirage. And it has come to the notice of all jurisdictions. This is not even a Kenyan affair, it's a global affair, that the tax rules are no longer applying to some people because of this digitalization. What do we mean? The commissioner, therefore, the government, therefore, introduced under the Section 3 of the Income Tax Act, what we call charge to tax, are mechanisms to ensure that if you are earning income by providing digital services, then you also contribute to the development of our country. Because most of these people do not, because the tax laws as they are do not apply to them. So we had the law, came up in 2019. It was then amended 2020 to introduce digital service tax. And the digital service tax, specifically a tax on the digital economy, applies to both residents and non-residents if you are going to supply digital services, or you're going to provide digital services to somebody who is going to use those services in Kenya. So if anybody, whether you're a resident or a non-resident, supplies digital services or provides digital services for somebody who is in Kenya, either the person is paying for those services using a bank account in Kenya, or that person is actually accessing those services using an internet protocol, an app, a mobile phone, a USSD, line that is based in Kenya, then we say that the user is actually in Kenya, and therefore digital service tax should apply. When you look at the residents and the non-residents, for a resident person, digital service will apply as an advance tax, because for residents, digital service tax applies alongside income tax, the ordinary income tax. If you're an individual, you'll be dealing with the ordinary income tax graduated. If you are a body corporate, you'll be dealing with corporate tax at the end of the year. So digital service tax to residents is an advance tax in that you declare the digital service tax, but when you are computing your taxes, you take it into account as an advance tax that has been paid. For non-residents, it is a final tax, so they don't need to belabor with any other process. The moment they pay the tax, that is the end of the story. The rate is 1.5% of the gross transaction value. What do we mean? Whenever you receive income on account of providing digital services, you are supposed to do 1.5% and remit it to the commissioner. By that, I mean digital service tax is only applicable on services and not goods. So if you are selling goods online, you are not providing a digital service. Most likely the person who has given you a platform to, sell or promote your goods is the digital service provider and is the one to account for digital service tax. Not you who has purchased goods online, or not you who has sold his tangible goods online. When is it payable? Once you've computed the 1.5% of what you've received on account of providing the digital service, you are required to pay it by 20th of the month, following the month in which you received the money for providing the digital services. So it is by 20th of the month after. So it is applicable to residents and non-residents. The rate is 1.5%, applicable only on digital services and not goods. And as well, you also have to look at the scope, because digital services are numerous. We have whether you are doing cloud storage, whether you are providing electronic media, whether you are providing a digital marketplace where people can place their goods and sell, whether you have a platform which connects fundis with the developers. You want to do plumbing, you go to a platform, you're able to identify as many plumbers as possible, engage them for your business. So those are the kinds of the services that fall within the scope of digital service tax. Remember, it must be a service that is executed through electronic means. And when you look at goods are actually manual because it has to be through brick and mortar. So Wanja, with that, I wish to say we are done with the very short presentation, so that then we can move to the next session. With the guidance of Joseph, maybe we pick questions and deal with matters that we've not handled in our presentation. Thank you.
Okay, thank you so much, Wanja and Nixon. That was really, really straight to the point. And I can see the participants here. I want to assume that they're ready to ask questions. Yes, Josephine already asked a question. She's posted it on the chat box. So her question is, just a second. I have captured the following laws as applying to tax matters. 1, Income Tax Act. Number 2, Finance Act of 2020 and Tax Procedures Act in 2015. So any other relevant legislation. So she needs clarification whether there are other relevant legislations on matters tax.
Thank you, Josephine. And thank you, Nixon, for taking us through digital service tax and voluntary tax disclosure. Now, Josephine, the taxes that we administer, we are governed by the Income Tax Act, Value-Added Tax Act, Excise Act, the Tax Procedures Act, as well as the various tax amendment acts or finance acts in the respective years. So those are the relevant legislations. Thank you.
Yes, Wanja, thank you.
Yeah.
Just wanted to add
Yes.
that just as Wanja has mentioned, the finance acts are not isolated laws. They go to change the main acts. For example, Finance Act 2020 has provisions that will lead to change in the Income Tax Act, Excise Act, VAT Act. There's also an act known as Miscellaneous Amendment Act and Customs and East African Customs Management Act and all that. So finance acts in isolation are not acts by themselves, but they are authority because they amend the main laws that they affect. Thank you.
Thank you. Now, I can see Josephine is asking, will Synapis share this presentation? That's yours, Beatrice.
Yes, it is. And I said, yes, we will share the presentation with all the participants. Yes, there's also another question I can see on the chat box. David Kioko says, hi Wanja, I have 2 questions. Number 1, how is tax relief applicable when one is compiling their returns? Number 2, if a business was registered in 2019, but only got a PIN and registered in tax and started transactions in December 2020, which periods are they supposed to do the returns?
Thank you. Now, Kyoko, if the business got registered some time back and you got a PIN number, there are some obligations that you added or that you registered with. Now, even before you start trading, you need to adhere to the requirements of the given tax obligations that you have added. For example, when you add income tax obligation and you have not started trading, you're required to file the annual returns. So in this case, if you registered and got your PIN way back 2019 and maybe started trading last year, 2020, then you were required to file the 2019 income tax return and the 2020 income tax return. And also, if you have obligations like pay as you earn and value-added tax, those are monthly return obligations, and you need to file your returns every month. In addition, I wish to state that if you have an obligation and you don't have that income, take for example, you have the pay as you earn obligation, but you don't have employees. I advise our taxpayers to deregister from such an obligation if you don't need the given obligation. Your second question is on tax relief. Now, the various tax reliefs that we have the personal relief, and this is given to all resident individuals. We then have insurance relief, and the insurance relief is when you have purchased either an education policy, a life policy, or a health policy. That's when you claim 15% of the premiums up to a maximum of 60,000 in a year or 5,000 in a month. It's advisable for these two. If yours is employment income or you're paying people employment income, then it's advisable if they are residents and they have provided you the insurance documentation, give them the insurance relief when they have given you the policy document, and when mainly you only know that somebody is paying towards an insurance if it's a check-off system. If it's not a check-off system, when the person will be filing their income tax returns, they will be able to claim the insurance relief. And then the other reliefs are, we call them the tax incentives, are for people who are in business. Now, those ones that are related to the various, like capital deductions and the like, it's when the person need to get authority, because our officers will be able to check on, once you apply for given capital allowances, then there's the approval that you'll get and you'll be able to claim that. Nixon, you don't want to add something on tax relief?
Wanja, I think you've covered it well, because
Okay.
we should also not confuse the normal tax reliefs that are available, personal relief, insurance relief, mortgage relief, from maybe the voluntary disclosure or waiver program. But you've already covered them so well, and the conditions to which they are granted. Thank you.
Okay. In fact, there's a question here from Michael, who is saying, we applied for tax waiver last year, June. Do we qualify for the new KRA voluntary tax disclosure program? You may handle that, Nixon.
Yes, what I know is that I already said that waiver and the voluntary disclosure are two different processes. So if you had applied for a waiver process, please just follow it through, because the effective date of the voluntary program started from 1st of January 2020. So it doesn't extend to the waiver process. So the waiver process will have to be followed to conclusion. Yes.
Thank you, Nixon. And in addition, if this person was already having a waiver in place, then that shows there was an assessment in the system. So when there is an assessment in the system already, then it means your declaration is not voluntary. So for that, as Nixon has guided, let's follow the waiver process. Somebody is saying, oh, okay, there are the questions on the Google Sheet. Nixon, are you able to open them, or I open? Okay, let me open the questions, just a minute. Nixon, are you able to get those questions, the ones on the Google Sheet, the ones that people had asked? Beatrice, if you're able to post those questions here, so it will be good. I'm trying to open. Okay, Agatha Mwangemi is saying, does KRA still offer penalty waivers, Lily? How long does it take? Yes, Agatha, the penalty waivers is still in place, only that it has to go through an approval process. And currently it's active and people are getting the waivers. The only thing, you must convince the commissioner the reason as to why you are applying for the given waiver. Okay.
Yes, Wanja, the
Yes,
questions on the, I'm not able to access them.
You're not able to access? Okay, fine. Let me, Beatrice, are you able to repost to us again as we try opening the Google Sheet?
Or she can send it to our WhatsApp. Then
Yeah,
we
Beatrice, you may send me
to.
you may send us to the WhatsApp, please, if you won't mind.
Yes, I'm posting them on the chat box.
Okay,
Just
thanks.
posted one, yes.
Okay, so Nixon, this one that's posted is yours. My business is purely online on Facebook and Instagram. What is the impact of me declaring that my adverts are for business as opposed to being for personal use on my page? Facebook was asking us to declare. The declared ones are not charged the 16% VAT on Facebook. What is the impact? What is the impact of declaring?
Facebook communicated with respect to the tax laws in the US, which in Kenya we don't know so much about. Okay, the unfortunate bit again, we don't have a double tax treaty with the US. So whatever Facebook tells you to pay in terms of taxes is with respect to their host country. However, what I know is that when you advertise through Facebook, you are going to pay Facebook for that advert. And it is Facebook that is offering a digital service. That is one. Number two, when you have a page which you use to advertise for other organizations, then you are also providing a digital service, and therefore you are liable to digital service tax. But if you have physical products that you display on your Facebook page, people get to buy and sell. People get to buy, for example, and they are tangible products. DST is not for you. You are not eligible for digital service tax. So I don't know if that answers the question exhaustively.
Thank you, Nixon. There's another question here. If I registered for pay as you earn before I hired and therefore did not file or pay as you earn for a period, how do I get the penalties waived for that period? Now, there's a process for waiver application. If you intend to apply for waiver, you go to iTax, you select the given tax obligation and the period that the given penalty you want it waived for, and then you give the reasons as to why, or you inform the commissioner, you make a request to the commissioner asking for the waiver, and you attach your evidences. So if you have the reasons as to why you did not file the returns when you're supposed to, then you can take up that widow. Okay, you can take this, Nixon. When is a consultancy business required to pay withholding tax? What other taxes will one have to pay after the registration of a consultancy firm as a LCC?
Okay, thank you, Wanja. I know we've been having a lot of debate on what is an LLC, a limited liability company. There's also LLP, limited liability partnership, which today maybe will not dwell on. But if you are a limited liability company and you are doing consultancy business, I think almost all taxes will apply to you, save for excise. So if you're going to if you're going to have employees, they know you are liable to pay as you earn. You need to pay salaries, but make sure you withhold the pay as you earn at the correct rates and remit to the commissioner. If you are going to engage sub-consultants, other people who are also consultants in the consultancy business, and they are not employees, then you're also going to deduct 5% withholding tax. Remember, consultants is a payment that is subject to withholding tax. So even as you get paid, your income will be withheld by your customer, so that when you are filing your corporate return, you get to claim the withholding tax that was withheld by somebody else. So corporate tax will apply to you, pay as you earn will apply to you. You cannot be under turnover tax because Section 12C, disqualifies professionals and consultants from being within the turnover tax regime. And then in addition to that, I've already said withholding tax, there's payee, there's VAT. If you meet 5 million threshold, you'll also be liable to value added tax. So almost all those tax heads will apply to that consultancy LLC. Thank you.
There's another question. In having a business name with your PIN, do I have to wait until I register as a limited company to do the returns? Now, when you get a PIN number and you register a business name as a sole proprietor, you use your individual PIN number to do the operations of that business name. When you register a partnership, then the partnership or a limited company will get their independent PIN numbers. So you will not wait to register as a limited company, but as you do business, you will add the obligation to individual PIN number and continue paying the taxes. And then in buying goods in wholesale, okay, Nixon, you can take this also. In buying goods in wholesale and VAT receipt issued, and I'm reselling again, do I need to pass it to clients again?
That is a business decision.
Yeah.
Yes, because if you don't pass it on to the next value chain, then of course you lose out. That's why we say VAT is a tax paid borne by the final consumer, but the people along the value chain get to pay it to the commissioner. So you pass it along. That is why you charge VAT as well. You are charged when you are buying, and when your services are also supposed to be VATable, you also charge VAT to the next buyer. So that is how VAT becomes a stepwise kind of tax.
Thank you. Unless you are not registered, maybe I can just add that. Yes. Unless you are not registered with VAT, then you become the head person to pay the tax.
Or you are dealing with exempt goods.
Yes. Thank you.
Wanja, there's a question on the chat box.
Yes.
Maybe I pick this, then you continue
from
with
Michael
the other.
Getonga, yes.
Yes, Michael is asking if they display hikes and hospitality facility, do they qualify? The main issue is, are you the ones who offer the hikes and hospitality services? And if you are the one who display and finally offer, like the boot camps, then you're not a digital service provider. You're just using digital means to promote your goods. Because at the end of the day, you'll need the hikers, you'll need patrons, people to come, and if it's an hotel, they need to sleep in the hotel, and that has nothing to do with the digital. But if you are a go-between, you assist people to display hikes, hospitality, and all those kind of things, and you charge them for that kind of service, for displaying, then you are subject to digital service tax. And then the other question, I don't know, Wanja, whether I'm competent enough, because I feel it's more of a business decision that we might not have the answer to.
Yes.
Yes, unless you want to say something about it. Thank you.
Which one? That one? No, that one is well answered. Very well answered. Yeah. So we can just proceed with the other question. There's somebody who is asking about the VAT aspect. And the question is, let me pick this question on VAT. VAT inconsistency reconciliation. These are the VAA, or the value-added tax auto audits that we were conducting. They are system generated. And if you have this kind of an inconsistency, and you have the documentation now to prove that you actually did purchase from this person, then you can contact your tax station for the reconciliation on any of the VAT inconsistency concerns. Then Michael Getonga is asking, when applying for a grant, is it better to apply at a limited company or limited by guarantee or NGO? And Josephine Mushogu is adding and saying, is research consultancy taxed? For example, at the university, are research grants taxable? Would you want to take it up, Nixon?
Yes, one, I think I'd already started talking about Mr. Gitonga's question.
Yeah.
that we don't know what is better, whether
Yeah.
for limited by guarantee or company.
In
But
fact, for
you
tax
should know that
purposes, it
each,
doesn't matter.
yes, you should remember that taxes are applicable differently on each. But whether it is better or not, maybe legal minds can advise, or business people, finance people. And then research consultancy, whether it is chargeable. Generally, if you are doing research, you are a consultant, you're actually in business. And therefore, it is income that is subject to tax. Both it's supposed to be held by whoever has mandated you to do the research, as well as when you receive the research money, you should also be able to declare income tax and VAT where as applicable. However, if research is being funded through a grant is generally not a taxable income. But if you are paid as a researcher, or you are paid as maybe a student within the university, then it is important to know whether it's withholding tax or pay as you earn, depending on the terms of engagement with the university. So I think that should come out very clear. The grant itself is not taxed on the organization that has received the income, but the grant is there to serve certain purposes, maybe do research. So the researcher in that case is actually doing business. If he's an employee of the university, pay as you earn should be charged. If he's a consultant who has been hired by another person, the consultant is also supposed to be charged to tax. Yes, Wanja.
Thank you. Thank you. The next question is, when your business deals in both fattable and non-fattable and transacts volumes of over 5 million, all inclusive, meaning the fattables would be less than 5 million threshold, are you eligible to value added tax? You would want to take it?
Yes, so this is straightforward. When we look at the 5 million, we only look at vertible sales, not non-vertible. Yes.
Okay.
Yes. So if you have
Thank you.
10 million, 6 million is non-vertible, 4 million is vertible, you are still not within the threshold. But remember section 34.4 of the VAT Act, the 34.4 and 6 allows you to voluntarily apply and be registered by the commissioner upon satisfying certain conditions for purposes of VAT. Yes.
Thank you. Thank you. So Agatha is asking, what are some examples of goods categorized as exempt goods and exempted from VAT? Now, let's talk about two things here, Agatha. When you're talking about exempt goods, you find them on the first schedule. The exempt goods and services from VAT are on the first schedule. The second scenario is when we say that a given item or a given project is exempted from VAT, we talk about the emission aspects and the like. If you are supplying goods and services towards a project and the government has allowed or provided, the government has allowed the given entity or the given project for their goods and services that they will incur, they be exempted from VAT, then those are two different scenarios. Take, for example, if you are supplying towards a specialized project and it has been given the exemption for the given items then it will buy, then that would be different from what is specifically exempt. So what is specifically exempt, goods and services, is what we find from the first schedule. Okay. Or you want to add something, Nixon, there?
No, I think it's well put, Wanja.
Okay. Anita is asking, hi, one of the directors in our dormant company registered us, that is the company, for VAT unknowingly. We have been filing nil returns since 2012 and have accumulated fines from before, but the company has not been trading. What can we do to solve this dilemma? Now, it's easy. Deregister with an obligation that you don't need. Deregister with that obligation if you don't need it. You just go to iTax, apply for deregistration, or at the registration, apply for cancellation of the obligation, and then our officers will contact you. I think that is the same question that Beatrice has posted. Michael is asking, if we have an Airbnb unit and we pay KRA taxes, are we still required to pay the new Airbnb tourism taxes? Yes. Okay, Nixon, you want to proceed with it?
I get your question. I think the Airbnb taxes have no relationship with the Income Tax Act or VAT, so you will still account for them. You still have to pay VAT if the turnover is more than 5 million. You're also required to pay COP tax at the requisite rates. So the profit you've made by letting out your Airbnb. But remember, digital service tax is accounted for by Airbnb, not you, because it is Airbnb that is offering a digital service. Okay.
Okay. So thank you, Nixon. Those are the questions that we have. So if you have a question, then Beatrice, guide us on the way forward.
Thanks, Wanja. Let me post more questions from the Google Sheet.
Okay.
I thought we have more questions from the live audience.
Okay.
Sorry, another question is here.
Yes.
Are small businesses taxable? We have a business name. Yeah.
Okay, so if you are, in fact, Beatrice, you may just leave the questions for us. Instead of even just posting, you can just leave for us.
Okay.
If you have a small business and you are operating as a business name, as we had stated earlier, what taxes follow an income? So if you are trading, you have that income, tax is on you. So it's because of the trading. In Kenya, the way we operate our taxes are on what are you doing more than how are you registered. So if you have employees, whether you're operating as a business name or a limited company or a partnership, you get the pay-as-you-earn obligation. Thank you.
Okay, next, I would like to know more about taxes that apply to SMEs within various sectors.
Wow, so that's quite a broad question, because what we are saying is an SME is there. What is the SME doing? If the SME is having employees and the employees earn 24,000 or more, that SME will have the pay-as-you-earn obligation. If the SME is dealing with fattable goods and services and the turnover is 5 million or more, then that SME is required to have the VAT obligation. That SME will choose between whether they will be in turnover tax or income tax, depending on what is their turnover. And if their turnover is even 1 million to 50 million and they want to be in income tax, still it's in order. If the SME is dealing with excisable goods and services, they will get the excise tax obligation. So the tax is on what the person is doing and the level they are operating at. Thank you.
Thanks, Wanja. The next question is on corporate tax. Who pays and how is it calculated?
Nixon, you want to take it up?
Yes, Wanja. Corporate tax is at 30% for residents, that's 7.5% for non-residents. There are also cases where if the rate is lower, EPZ, 10-year window, no tax. For special economic zone operators and companies that are there, or developers, they are charged at 25%. So the rates vary. depending on maybe where there's an exemption, but the general rate is 30%. The basis of calculating corporate tax is on profits, income minus expenditure. The profit is what is chargeable to corporate tax at 30% for resident entities. But I said we are just giving a sneak preview. If we even start discussing how to allow, disallow, and what is chargeable, I think we might actually spend the whole night doing it. So we're just giving high level, but hopefully maybe next time we can narrow down to specific topics, because this is very wide for today. Yes.
Sure.
Okay, thanks, Nixon. Next question. How do I separate personal income tax from business tax returns as a self-employed individual, because the lines get blurred sometimes?
So now this person is employed, and in addition, they have a business. Now, for you to be able to know you are separating fully, you can incorporate and ensure you separate everything in your books. If you have not then incorporated your entity and you are still operating as a sole proprietor, then what you ensure you do, since in the allowability of expenses, personal expenses are specifically not allowable, ensure that only the business expenses you put in the books. Any personal expenses, you don't put it there. So it's the practice is more on the personal discipline that you adapt, and ensure that in recording the expenses that ought to be allowed, if you're in the income tax regime, only record the business expenses. And maybe in this case, if you're income tax regime, you can read section 15 of the Income Tax Act. It gives us more information about what are those expenses that are allowable for against business income. But specifically, it says personal, it says they're the business expenses that are wholly and exclusively for generation of that given income. Thank you, Beatrice.
Thanks, Wanja. Up next, when does VAT apply for businesses?
Okay. Nixon, you want to take it?
Okay, you can pick it up.
Okay, so when is VAT applicable to the business? So when you get registered for value-added tax, because you're dealing with fattable goods and services, the sales that you make in a given month, you need to charge VAT. And the purchases that you made in that given month, you are charged the input tax. So the transactions for this month, you ought to file the returns for them on or before the 20th of the following month. So the tax point for value-added tax is on or before the 20th of the following month. But I wish to state also that for input tax, you are allowed to claim the input tax, that is the VAT you paid on purchases, within a period of 6 months. Thank you, Beatrice.
Welcome, Wanja. The next question is, what implications does withholding tax have on my business? Yeah.
So if you are a trader and withholding tax has been withheld from you, then what that means is, come the end of the period, when you are filing your income tax returns, all the withholding tax that was withheld from you, any advance tax or any installment tax that you paid in the course of the year, once you compute the tax payable at the end of the year, you are required to less all that. So advance tax, withholding tax, or installment tax is basically a tax that's paid in the course of the year. Now, the only thing is advance tax and installment tax, you're the one paying, but for the withholding tax, it has been withheld from you. On the other hand, If you have been appointed as a withholding rent or income tax agent or withholding value-added tax agent, all for the withholding income tax, if you're making a payment that withholding income tax should be deducted from, then you are required to make the deduction and remit the withholding taxes that you have deducted from other people to the commissioner on or before the 20th of the following month. Thank you.
Thanks, Wanja. The next question is how to get a tax compliance.
Okay, now we apply for tax compliance certificate from the iTax system. You log in with your PIN and password and other certificates. Select apply for tax compliance certificate. If you have any debts, the system will actually tell you. And upon making the payment, you will be issued with the tax compliance certificate automatically from the system. Now, if you have some outstanding taxes that maybe you don't have the funds to pay for at that moment, then you can visit your tax station and enter into a payment plan on how you will be able to pay the given pending taxes. And in that case, the tax service office will be able to facilitate you getting the tax compliance certificate at that time you need it, as you continue adhering to what the payment plan is all about. So Michael is also asking, is it possible to withdraw a KRA waiver application? Yes, you can cancel. You can, once you pay, if you had made a waiver application, you can, and you pay for the given penalties that you are making the application for, you can withdraw the waiver application. It can be rejected. It's possible. Josephine Mushogu is also asking, are there any specific taxes beyond what you covered in relation to agribusiness for a smallholder farming venture? Agribusiness is just business. And so there are no other specific taxes for it. It's basically the taxes that we have covered. Back to you, Beatrice.
Thank you so much, Wanja. The next question is somebody is requesting for an end-to-end walk through concerning company taxation. I don't know whether I am getting this clearly, but I tend to think they want to understand how do you actually walk through this taxation issue in your business? Is there a time when you've covered all your bases, as in with relation to tax?
Wow. So what we said is this. If you from the KRA point of view, we look at what are your incomes. So if you are incorporated, in fact, the only difference in taxation is where somebody is operating as a sole proprietor and the other one is operating as a limited company, is only on the income tax basis, whereby the sole proprietor or the partnership, the gain from the business will be on graduated scale because it will be on the individuals. And for the limited company is at the corporate tax rate of 30%. But everything else is on what are you doing? Do you have employees? You get the pay as you earn obligation. Are you dealing with fattable goods and services? You get the value-added tax obligation. Are you dealing with excisable goods and services? You get the excise obligation. And are you making a payment that attracts withholding income tax? Then you need to, there you don't get an obligation, but you need to withhold and limit to the tax authority. And if you are that business that you want, your turnover is between 1 million to 50 million, then you get the turnover tax obligation. So it's more of what are you doing? And those are the main tax obligations. Now, if you happen then to sell property, there's the capital gains tax that you will be required to pay, but that's when you sell the property. If you have the vehicles, then that is the commercial or the public service vehicles. There's the advance tax that you pay on or before the 20th of January. Basically, those are the given taxes that we have in Kenya.
Thanks, Wanja. And the next question is, somebody would like to know the penalty for non-filing of returns in the first year of operation. And I think this person has operated for only 3 months.
So the penalty will relate to what is the tax obligation the person has. If your obligation is income tax for individual, we talked about the penalty being 5% of the tax due or 2,000. If it's in relation to a company where you are supposed to file your returns once in a year, the penalty for late filing is 5% of the tax due, or Kenya shillings 20,000, whichever is higher. And for the monthly obligations, that is for value-added tax and excise obligations, the penalty for late filing is 5% of the tax due, or Kenya shillings 10,000. And for pay as you earn, which is a monthly obligation, the penalty is 25% of the tax due, or 10,000, whichever is higher. And for turnover tax is 1,000 for every return that's filed late, and it's a monthly return. So those are the given penalties for late filing. Now, Michael Getonga, who had asked, is it possible to withdraw a KRA waiver application, is saying, Lather, is it possible to withdraw a KRA waiver application and apply for the voluntary disclosure program? As Mr. Nixon was taking us through, Michael, he stated that if already an audit has been done on you, or a compliance check, or if you have an assessment already in the system, then that one was not a voluntary tax disclosure. So the voluntary tax disclosure, as he said, is a call on you now. If there's any income that you have not declared from July 2015 to June 2020, that is where you enjoy the voluntary tax disclosure. But if the assessment is already in the system, then it means that was not a voluntary disclosure. I hope it's clear to you, Michael. To you, Beatrice.
Thank you so much, Wanja. Another question here is, how do you do tax returns with a business name registration?
If you have a business name, then you file your returns using your individual PIN number, because it's on your individual PIN number that you'll be able to add the relevant tax obligations. So it's on, you will use your individual PIN number to add the tax obligations, and then you will do the filing as per the given tax obligation that you have.
Wow, that's wonderful. The next question is, what tax bracket does businesses in the service industry fall under?
Nixon, you want to take that up?
Yes, Wanja, I think I'm just suggesting we need to organize another training, maybe a bit topical, because you know, like a question like service industry, it's so wide. Are you talking about an hotel? Are you talking about consultancy? Are you talking about airline? You know, agency? So there are so many. But basically, what happens is, if you are in a service industry, you are providing services. The first thing you need to note, if your services attract withholding tax, then your clients will be withholding if they are also businesses. And then number two, your income is subject to corporate tax if you have a company, or income tax if you are trading as a business name. So there will be the aspect of making sure you compute your expenditure, which you minus from income, get your profits, and then you levy 30%. Again, if you are beyond the 5 million threshold, if your services attract, because there are certain services that are not vatable, like medical services, agricultural services, veterinary services, and so many others, they are not vatable. So if your service is within the VAT framework, then you know when you reach 5 million, you need to comply with VAT. If your service is excisable, because we also have excisable services, okay, transfer of money, okay, and things and other financial transactions, are also debt factoring, things like that. you might also be falling within the purview of excise. So it's important you check your business against the taxes that are available. Of course, we always encourage that where possible, use a professional, because you as a business person, your role is to do your business. So, but there are also people who have done tax, they have gone through KRA, some have done CPA, some are experienced tax people. Please use their expertise. And where you have a problem, Wanja and Nixon here will always be available to help you on specific matters, because we cannot give an antidote to all tax problems, but we can always guide whenever you come with us to us with a specific issue. Thank you. And of course, pay as you earn will still be applicable if you are going to employ people and pay them 24,000 per month or more. Thank you, Anja.
Thank you.
Yes, we have another question. Are there tax rebates for businesses that suffer calamities?
So, Nixon, you want to take it up?
Yes, Kenya currently, I don't think we have tax rebates with respect to calamities. In Kenya, what is done usually, you find Finance Act has introduced something, maybe like currently. Before then, PPE, the protective gear against infectious diseases, were avertable. But now with the pandemic, we realized we needed to move them to exempt. So we really don't have a rebate somewhere in the law, but we have exemptions. We have tax holidays, for example, the EPZs. We have reductions in tax rates on specific issues, where you've constructed for low-cost housing, 400 units and above. Or, of course, we also had the plastic guys, but that one was already removed under the law, and the others that I've mentioned. There are also incentives available through capital alliances. If you're going to invest in any capital equipment for use in your business, you are eligible for a capital, what now they call investment allowance, which is akin to what you see in depreciation, just to take care of the reduction in value, the diminution in value of an asset that is used for business purposes.
Okay.
Yes, Wanja?
Yeah. Thank you. Any other question, Beatrice, or we are good to go?
We are almost done, but we have a couple of others. There's one here. What other taxes apart from corporate tax is one supposed to pay, when to pay, and what's the current corporate tax applicable?
Okay. So the corporate tax rate is at 30%. We know during COVID, the rate was reduced to 25%. And for corporation tax, or for the non-individuals, a non-individual entity is allowed to choose its accounting head. And the returns ought to be filed 6 months after the head of the accounting date, and any balance of tax paid at least by the last day of the 4th month after the end of the accounting date. So for non-individuals, they choose the accounting year. And so ensure that you have paid any taxes, any balance of tax, at least by the last day of the 4th month following the end of that year, and file the returns at least by the last day of the 6 months.
Thanks, Wanja. Next questions. How are services taxed?
Wow. Nixon has mentioned about that question, how the services are taxed. And he has said that number one, it is the business, the person who is offering that service is in business. And so as you are doing your business, what are you doing? Do you have employees? You get the pay-as-you-earn obligation. When you're doing the service, you compute the accounts. You are either, you can't actually be in turnover tax. When you're offering service, you are in the income tax regime. And you pay tax on the profit from the given services. Thank you.
All right, next, I have to pass on tax costs to clients as part of the costs they pay. Maybe you can give a clarification on that.
Yes, I remember Nixon had covered this, and we had said if you are a trader and there's some input tax you have paid, when you are selling, then you charge VAT on selling. And what you pay the taxman is basically the difference between the VAT on selling less the VAT on purchases, or the output VAT less the input VAT. That's what you pay to the tax person. But we said if you are a trader, yes, but you're not registered with VAT, then it means whatever you were charged when you bought, you absorb it. You don't carry it forward to the next person because you're not registered with VAT. So if you deal with fattable goods and services, and the people that you deal with require you to be registered with VAT, it is a good thing because you'll be able to claim your input VAT. I can see there are two questions here from Michael and from Agnes in the chat box. Michael is saying, is it mandatory to pay income tax installment, or we can pay at the end of the year? Michael, for corporate, it's mandatory to pay your taxes in installment, or for non-individuals, it's mandatory. Whereas for individuals, what the law provides is that if the tax payable is 40,000 or more, then you are required to pay your taxes in installments. But if it's less than 40,000, you can pay at the end of the year. And Agnes is also asking, how are retirees taxed? Nixon, would you like to take that up? How are retirees taxed?
I think retirees don't get any special treatment with respect to tax because a retiree might be in business. So the business income will be taxed like any other. But if you are talking of retirees with respect to pension income, then that is what is given special treatment. So pension income, if you're above 65, it is exempt. But if you are not within that age bracket, from that age bracket, you are supposed to be charged, given 600,000 tax-free. If it's lump sum, then the balance is taxed on favorable rates. Instead of the 100 and something thousand bands that we usually use, it is on 400,000. But I will keep saying this. I think, Beatrice, I think we need to organize a more topical training so that some of these things come out clear. Because for now, even if we say that, it doesn't look so, it doesn't come out so clearly. But if we were just having a presentation, for example, on business income taxation, we'll be able to demonstrate what is installment, how do you compute income, which is chargeable to tax, how do you compute the 30% on what, and then now it becomes clear. But until then, I think we'll just give high-level answers to the same.
Thanks, Nixon. I think our last question for the day is taxation for export products. I tend to think somebody would like to know more about that.
I didn't get the question. You said it's tax of?
Taxation of export products. They want to know how that is done.
Oh, wow. So Beatrice,
Yes.
I wish to state that if you are dealing with exportation business, you pay taxes just like any other person. The only difference is when you are exporting your goods or services, then, when you're exporting your goods, then they become exempt. They become zero rated. So for VAT purposes, you will be selling, when the goods get exported, they'll be sold, they'll be deemed to be zero rated for VAT purposes. But for your other business, all the other taxes apply. So it's only the VAT aspect that you have that advantage. But for the other taxes, they will apply.
Wow. Thank you so much, Wanja. I can see our time is almost gone. So if there's anyone with a burning question before we wrap it up, please let us know. I can see Gitonga has posted another question here. If a local firm offers consultancy services to a foreign firm, is it subject to VAT?
Nixon, you would want to take it up?
Yes, now I think what is important to note in that respect is where is the foreign farm? You know, you can be a farm that is in Kenya and then they're saying they are foreign.
Yes.
So the issue is not really whether they are in Kenya or not. There are two main aspects. Is it foreign with respect to the location of whoever you are providing the service to? And if that person is outside Kenya, then as Wanja had already said, that is zero rated. You charge VAT at 0%, you claim input tax, and of course you are eligible for a refund. But if the person is foreign, yes, it's a foreign body, but here, then some of them have what we call exemption status. So you are supposed to supply them and not charge them VAT. So I think that is very critical to note. But there's a whole exemption process. How do they get to buy without their suppliers charging the VAT? There's a procedure which most of the foreign bodies who are exempt know how to approach, and it's not a very long process, but it starts from their parent ministry and it ends up with the KRA so that they are able to buy without being charged VAT.
Yes. Wow. Thank you so much, Wanja and Nixon. That was a very enlightening session. I'm sure the participants have enjoyed engaging, and I'm grateful that some of those questions that were being asked in groups have been answered this evening. So to wrap it up, I would like to close with a word of prayer. Are we okay at where we have ended? Wanja, Nixon, final thoughts?
Yeah, I think that is okay, because I see most of the questions are now just going around what we've discussed. But I'm sure you'll organize another session so that we tackle maybe topic by topic, so that we get this information better. And it's easy to assimilate.
Thank you. Indeed, Nixon, Beatrice had said that this is the first session. So it was more of the icebreaker and letting her team know that she is now liaising with the tax people. And so, Beatrice, we are still available for future engagement with the SMEs, and we would want the SMEs to get the tax information in full. Thank you, Beatrice, for the opportunity. And thank you, Nixon, my colleague, for coming out and sharing your wealth of knowledge to our fellow Kenyans and our fellow taxpayers. Thank you.
Okay, you're most welcome. Let's close with the word of prayer. Heavenly Father, we are so grateful for this opportunity, oh God, that we had this evening to learn more about taxes. Indeed, your word tells us to give to Caesar what belongs to Caesar. And this is very, very important for our entrepreneurs as they learn to navigate their businesses through these challenging times. Oh God, we continue to pray that, Lord, let them have clarity on how to continue doing businesses the kingdom way, oh God. I pray for every entrepreneur who joined the call tonight. I ask that, Lord God Almighty, as they leave this session, Jehovah, they will learn and go and do things the right way. We thank you for the KRA team, Nixon and Wanja, who came out and shared from their hearts what they know about taxation. We pray your blessing upon them. We thank you also for the Synapis team, oh God, who made it possible for this session to happen. We continue to pray that you may guide us. In Jesus' name we pray. Amen. Amen. Thanks, guys. Thank you so much.